Hello, Elizabeth Berg here, National Agency Vice President for Education and Training. Thank you for joining me to complete this overview on FinCEN's residential real estate rule. This will require reporting starting December 1st, 2025 on residential real estate transactions that are cash to entities and trusts. You're going to have to report a lot of information to the federal government. This is just an overview. There's going to be a whole series of courses that dig into the nuts and bolts of this more. But I just wanted to give you a taste of why this is and the background information as to why the federal government is asking us to do this. So what FinCEN, Financial Crimes Enforcement Network, is trying to do is actually stop money laundering. Money laundering is used by terrorists and drug lords to make the money appear to be clean. And it's done in a very simple process, and FinCEN and others know that they're using our residential real estate markets for that. Basically, what happens is the bad guys or girls actually deposit small amounts of money into banks and systems that don't require and don't trigger any duty to report. You might know that banks have currency transaction reports that they have to file. So what they are doing is they're putting this money in small amounts. Then in step 2, the money is transferred through a lot of different transactions, which could include real estate, to blur the audit trail and make it hard to follow where money is being sourced from. And then this is like shampooing. It's done multiple times so that at the end of the day, the money appears clean. No one can really track the source of it, that it's coming from terrorism or drug activities or trafficking, all sorts of illicit activities. Now it looks clean. That's what FinCEN is trying to stop. Financial laundering is a financial crime. And what FinCEN's mission is to actually safeguard the financial system from illicit use, combat money laundering, and related crimes. That's what they're trying to do. They're trying to make our monetary system so that money launderers cannot use it. As some background, FinCEN was actually established by the Bank Secrecy Act back in the 1970s. It is a part of the Department of Treasury. It was headed by Secretary Janet Yellen. Now it is Scott Bessent. FinCEN is led in the prior administration and the current administration by Director Andrea Gacki. For this specific regulation that we are talking about, it was part of the Anti-Money Laundering Act of 2020, where they said, hey, it's time to figure out beneficial owners of companies. That was the Corporate Transparency Act, but also to see who is actually using our residential real estate system. Hey, FinCEN, and this is Congress telling them, hey, it's time to do some rules on this. And if we actually go back in our history, just to give you a little snapshot, we could have started to have to do this in 1988. Who remembers Nancy Reagan, right? The war on drugs, just say no. Persons involved in real estate closings and settlements were actually required in 1988 under the Bank Secrecy Act to start doing these types of reports, right? We got some exceptions because it was going to be really hard to implement to provide this kind of information. Then 2001 happened with September 11th, and a lot of efforts moved over to Homeland Security when we're talking about OFAC and all of that. But now it's back in FinCEN's hands, and they have created rules. So, when we talk about this being a brand new regulation and all of that, well, it's actually been here since 1988. And I want you to know that, not because we have to, just be fine with it, but to know that we could have had it earlier. And so also, if any of your customers ask you, and they're kind of balking at providing information you're going to have to give, you say, hey, we could have started this in the Reagan administration. So how does FinCEN actually combat money laundering? They do it in a variety of ways. I want you to know that, our industry is not alone. Banks and lenders already have to do suspicious activity reports. If their frontline tellers and others are working with individuals that, something's going on, something's a little funny there, they're actually required already to file suspicious activity reports. I will tell you that the compliance on those is pretty tough. There's also currency transaction reports that have to be filed. Are you depositing more than $10,000 in cash into our system? You might have seen some recent regulations on that along the border that came from FinCEN, where they also said, hey, amounts above $200 and above, we also need to report. FinCEN is serious about combating money laundering, and then starting December 1st, 2025, they're also adding us. So what does FinCEN do with all of this information? What are they doing with the data? They're actually analyzing it and disseminating it for law enforcement purposes. You'll see this list here. They're working with Homeland Security, the IRS, the SEC, FDIC, FBI, Immigration, Customs and Enforcement, ICE. They're also working with, the Office of Terrorism and Financial Intelligence to identify sanction evasion. Okay. They do cooperate with a lot of international bodies and foreign governments to try and stop money laundering. It's not just in the United States, right? When we're talking about drug trafficking and terrorism, it's an international problem. And then FinCEN also has the exchange, where they have a voluntary public-private partnership to bring together law enforcement, national security agencies, and the financial institutions to help combat financial crime. And here you're just going to see, how they do this. They collect the information, they analyze the information, they provide it to law enforcement, they provide it to the FinCEN exchange and private partners, so that everyone's kind of aware of who the bad actors are, so that we try to get them out of our financial system. As a reminder, if you're not aware, or if this is new, it's okay. This process, FinCEN didn't just come up with it and say, nope, we should do this. They actually started in 2016 with geographic targeting orders. These geographic targeting orders were specific to areas, geographic targeting, and it started in New York and Miami. It eventually has expanded over these last 9 years to a total of 69 counties. The GTOs originally were in Miami and New York and focused on all cash residential transactions by legal entities. Because why does FinCEN care about those? Well, with a legal entity, they don't know the records don't tell us who actually is in control of that entity. Is it actually a drug lord or a terrorist or someone working with them that's on a list somewhere? You can't tell that just from ABC LLC. So that's what FinCEN's trying to find. Who actually is in control of these entities that own the residential real estate that might be laundering money? Originally, these reports were high dollar amounts. Eventually, it was lowered to $300,000. Now, here's the deal. FinCEN has been collecting this information for, 9 years. And the GTOs actually proved to be highly valuable. 40% of these reports correlated to a bank suspicious activity report. Remember how the banks had to identify people that were kind of bad actors? Well, 40% of these GTO reports correlated to someone that was flagged by a bank. And then 7% actually involve a subject of an ongoing FBI investigation. 7%. We know in our industry how hard it is with resources to get the FBI to investigate wire fraud. But in this instance, 7% of the people identified by GTOs are undergoing an FBI investigation. So that's why FinCEN is expanding it nationwide. The data is actually being used and is being fruitful to say, hey, these are where the bad actors are at, and this is the real estate they are transferring. So just to give you a little bit of background, the final rule was created in the winter, February of 2024, and there was a comment period. Alta, FNF, others all provided comments to say, hey, what about this? Maybe think about this, FinCEN. The final rule was issued August 28th and published officially August 29th, 2024. The version that is double-spaced is 21 pages with 91 pages of rule explanation and 101 footnotes in case FinCEN ever has to answer to Congress about why and how they created the rule. Just to give you a taste, again, this is going to be covered in the nuts and bolts. The rule content includes reasonable reliance, tells you what transactions are actually reportable, identifies how you're going to have a reporting person from your company tell FinCEN all of this information that is reportable about the buyer, the seller, the actual property, and then the payment itself. FinCEN also tells you how, what, and when to file, and then has various miscellaneous provisions. The one thing that I do want to touch base on in this presentation is reasonable reliance. When the first rule came out, I can tell you that it just said, hey, settlement agents, you got to go collect all this information. Well, how do you know that it's right? Where do you get all of that information? The American Land Title Association and others said, hey, FinCEN, we need a reasonable reliance standard. We need to be able to rely on statements provided to us, and then you can go do your investigation once we provide certain information. And FinCEN listened. So a couple things about reasonable reliance. You can rely on the statements of others unless you're absent, unless you have information or facts that would reasonably call into question the reliability of the information provided by the reporting person. That's in general, right? If someone tells you something, yeah, it's pretty nice to be able to rely on that information without, having to double check it. That provides this. What I will tell you when you're thinking about reasonable reliance, when it comes to the actual beneficial ownership information of that company, who's in control of the company, who's in control of the trust, who can move money in and out of entities and trusts, who are going to be signing the documents on behalf of entities and trusts. That beneficial ownership information, in order to have the reasonable reliance standard, you must have it certified by someone who knows that information on the beneficial owner in order to have the reasonable reliance standard. Has to be in writing and certified by that person. The good news is, in presentations later, you're going to see the actual certification form that the American Land Title Association has created for both the buyer and the seller. Another thing that we need to cover right now, just to have it in everyone's mind, is to know that there is actually a cascade of reporting persons under this new regulation that starts December 1st, 2025. And yes, settlement agents, you are at the very top, okay? So the reporting person is the person listed as a closing or settlement agent on the closing settlement statement for the transfer. If that person is unavailable or there isn't one, then you go down through this cascade. Who prepares the closing or settlement statement, who records with the recording office, on down the line, okay? Settlement agents, you're at the top. FinCEN knows that you are the spoke of the wheel that knows everyone and has all of the information. And you are the one that is going to be providing most of the information to the federal government. Now, there are workflow considerations and presentations. There's going to be a lot of nuts and bolts training that's following this. You're not just in this alone. There's also going to be a lot of FAQs that are created. So even though I'm saying it's on you, please know that a lot of us are working to provide you good information and making systems so that this is as less onerous as possible to do. The filing procedures, just to give you a taste, there will be an electronic portal established by FinCEN to file these reports. The BSA, Bank Secrecy Act, e-filing system already has this in place to file CTRs, cash transaction reports, and also SARs, and then the GTOs actually go through the CTR system. So that is already established. They will be doing a special portal and a special form just for residential real estate reports. So it's filed electronically with FinCEN. And here's just to have in your mind, this is going to be rolling. This is not like the 1099s, which is once a year. These FinCEN reports have to be done by the latter of either the final day of the month following the month in which the closing occurred, or 30 calendar days. So let's just pause there. The latter of, let's take the date December 15th. If the closing occurs on December 15th, 30 days from then is December 14th, or the month following the date in which the closing occurred, the last day, that would actually be January 31st. You do have time, but just know that it's on a rolling basis. And as this gets started, you don't want to be stuck without having started collecting that information. FinCEN for record keeping says you have to keep certain information for 5 years from the date you filed the report. They specifically state the certifications about beneficial ownership information and designation agreements. As a clue, designation agreements are if in that cascade we just saw, if there's an agreement from someone lower in the cascade to file on behalf of someone else and they do that designation, that is who it would be. That form also has to be kept. Something else that I suggest is creating a system to make sure that you know that the filing was actually provided to FinCEN. On their system, they do have the ability to track it, but it never hurts to double down and make sure that you have that information also. So with that, I kind of mentioned this before and maybe hinted at it, but FinCEN's serious about money laundering. If you are not collecting these reports, there is the potential for civil and criminal liability. If you are negligent, you're just kind of not paying attention to the situation, FinCEN can fine you not more than approximately $1,400 per violation, up to about $110,000 every day. It's not necessarily criminal. If you are doing this willfully, not filing reports, you know about the rule, you know you're supposed to file the reports, but you just don't want to, well, that's potentially a crime with up to 5 years in prison and a penalty of up to $250,000. And then the actual penalties go up, right? It wasn't just a mistake, you were willful. I don't want you going to jail. You don't want to go to jail. We've got to figure out how to do these FinCEN reports, and we're here for you. So with that, my name is Elizabeth Berg. This is just an overview, just so you understand where this came from. And so when you're talking and going out with your realtor customers or your investors who might be providing you these cash deals, you know some basic information.